Traders checking in on the stock market today. So the bulls starting the week, pretty much best case scenario, full steam ahead. Had a lot of deja vu with how today reminded me of last Wednesday with one major difference, which we will look at. We'll also talk about some of the short-term headlines that could drive the market. I personally don't trade off of those headlines, but it's important to know what the market cares most about because we know the bots and the algos and Twitter certainly looks to take advantage of that. And we'll be back and look at all of that in just a second. Hello traders and investors, we are now less than 1 month away from the coming US elections, which are sure to bring volatility, opportunity, as well as risk to the markets. We're going to be putting out some public content on our YouTube channel as far as different sectors and possible outcomes to be watching for, but the majority of our in-depth weekend research will be compiled in our weekly swing reports that will go into specifics as far as trade ideas and the levels that will trigger them. See the pinned comment in this YouTube video for a link to the swing report page where we have access to a previous report as a sample, and you can sign up and get those trade ideas to help prepare for the coming elections today. Let's check out some charts. So getting right into it, starting with SPY, the bulls in full control of the day with a green Marubozu candle. So I consider this a daily trend change, and I've talked in the past about what is required for a daily trend change, and I look at this little pullback here. Is that a trend change? No. Because we broke the low of the previous day by 40 cents and then just saw continuation of the same move. In this instance, from the low of Thursday to the low of Friday, that was almost a $4 pullback. That is a much more significant pullback and a much more clear pivot point to call that a daily higher low and higher high. So 331.19 is the daily higher low. We have the bull break and the strong close at the high of the day, and now 343.06 is the next resistance level that we are looking at. What about the volume? Where is the bull volume? As I've said many times, I do not care about bull volume on SPY. We do not need bull volume to go up. I learned that lesson after the election last time around, and 2017 showed me that. You need bear volume to go down. You don't need bull volume to go up in reference to the broader markets. If I'm talking individual stocks, it's not the same story. But this game is not created fair for the bears and the bulls. The bulls have an advantage, and volume is one of the ways where they have that advantage. Should say the lack of volume needed to go up. And again, just real quick, I go back, I look at the weekly time frame, 2017, monster bull move here, declining weekly volume. So big sigh of relief for the bulls. The question that we had into the end of last week is that our weekly lower high already being set? If it is, we got to be cautious of confirming a weekly downtrend. The answer is no, it's not, because we broke the high of last week. This is giving the bulls more space to work with, even though we can still and probably will still form a weekly lower high compared to 358.75. There is tons of space for a weekly higher low. Shouldn't say tons of space. There is now more space for a weekly higher low to form compared to 319.80. So I can say confidently that if 319.80 support holds, we're going to be talking about all-time highs in the near term to end 2020. Why? Because if 319.80 does not break, we do not have a confirmed weekly downtrend. The weekly uptrend remains intact. IWM standing out in a big way as a laggard mover. So we saw the start of this bounce from September 24th to October 1st favor semiconductors and the tech sector. The last 2 days, the healthcare and financial sector have caught up a bit, and IWM benefits more when healthcare and financial sector is stronger than the tech sector. So today, just looking at percentages, they were all very similar. And looks like my chart closed, so all similar percentages, but IWM is standing out in a big way. And after breaking 156.85, we are looking at 159 and 159.82 before we then look back to the all-time high. So the high of the COVID bounce is back in play after a solid 2 months of consolidation, trying for a little monthly bull flag, and the short-term move will be all about 159.82 to try and see continuation. Daily time frame, tons of space for a higher low to form next time we consolidate. So XLF standing out with that same strength. It was a laggard, it was a weaker bounce all September 24th to October 1st. The last 2 days, it has stood out strong. I like the 2 week time frame for XLF for clarity. High of the COVID bounce, low of the pullback, lower high, higher low is forming, And now the most important resistance is 2601. If we fail to break 2601 and form just another lower high, we could stay within this tightening range into at least earnings season, if not beyond. Earnings season will dictate whether we head towards resistance or head towards support, and that will be upcoming. Let's just look real quick. When is earnings season? BAC next week. So the financial sector is going to start earnings next week, and that's going to be key for where we stand in response to those earnings on that 2-week time frame. Financial sector, weekly high or low, I should say healthcare sector, daily high or low, 103.71, and need to see a bull break of 106.40. We closed right at that level with a double top. Goal for the bulls is to break that tomorrow convincingly. You could refer to this as an inverse little head and shoulders. Left shoulder, head, right shoulder. It was very little right shoulder. There would be something wrong with this individual if it were a real person. But quick little high or low, and 106.40, 107.08. Next resistances. Same thing, we're watching for the potential of a weekly lower high compared to 109.74, but bulls, nice space to work with, and not convinced that our weekly lower high is set just yet. As long as we have the daily uptrends, we are not setting weekly lower highs. QQQ. So for QQQ to join the party, we need to break 282.88. So still 1% shy of that resistance level. Not notably weaker, just slightly weaker since Friday and now today. So daily high or low trying to form at 273.44, and a bull break of 282.88 will keep this daily uptrend going. And again, it would be a big sigh of relief for the bulls, who would then have less concern about the potential of confirming a weekly downtrend if we can continue to higher highs on this bounce. Biotech sector, huge day today. 5% move. We had the daily equilibrium tightening up, and it broke bullish. And there was huge follow through. The bull break was 113.23, and we got almost $3 higher than that level. So daily higher low and higher high, 116.64, and then the all-time high of 121.06. A lot of that had to do with headlines and news of Trump and being helped by cocktails of drugs from this company, that company, REGN, and obviously a solid response to that. And just like that, we are looking back at the all-time high after a monthly potential bull flag. So very strong bull break on the daily for the biotech sector. Let's talk about headlines while we're on that subject. So again, I don't trade responding to headlines personally. I know what I'm aware of to be watching for. I know what could lead to a bearish reaction, but I'm not sitting here scanning for headlines and instantly jumping into positions when they come out. So the headlines that we're watching for in the short term, it favors the bulls to a certain degree. Now, the two headlines that I'm watching are Trump's health and stimulus for the next couple weeks. So Trump's health has now priced in all bullish news that it can. The only news that we can get on Trump's health from here would be bearish, in my opinion. He's coming out of the hospital in 2 hours at 6:30 p.m. Eastern, and the only thing that can happen from here, the market has priced in him getting better. So if he were to get worse, that would be a bearish reaction. If nothing happens and he stays better, the market is accurately priced in. We shove it out of the way. Trump's health and COVID no longer a concern to the market. We're not there yet, but again, significant pricing in of the market for him being better. The other headline with the stimulus, a lot of the negative has been priced in. We're not expecting anything in the short term. We have the Senate, I don't know if you would call it recess, but the Senate is looking to October 19th, I believe is the date for when we're going to come back and for when we can look for any potential progress. There's still phone calls going on, but as far as bearish headlines, we're pretty much, we kicked the can down the road. We have priced in the potential of 2 weeks of nothing happening with the stimulus bill. And if something were to happen, that would be bullish. So they're a little bit opposite, where for Trump's health, we could get something bearish from here. Stimulus, we could get something bullish from here. Otherwise, we're looking to mid to later October. So that's where we stand as far as headlines are concerned. Forgot to talk about why SPY was so similar to Wednesday. All of our sectors were at the high of the day. Same thing as Wednesday. What was the big difference? Wednesday, 2:20 p.m. Let's look at it on the 5-minute time frame. Bearish news of a lack of a stimulus deal being reached. And here is the market pricing in what it now knows. We're probably not going to see a deal in the near term. So it was a very strong day. Our sectors were at the high of the day at the same time. We were close to all of our sectors being up 2%. All of our major sectors, financial, healthcare, and tech, being up 2% all on the same day. And we almost pulled that off again today. The difference between today and Wednesday, no bear headline, no sell-off, and we closed up near the high of the day. Very similar day aside from that headline reaction. So this is the market pricing in the fact that stimulus probably isn't going to happen in the short term. So now we already know that. And the market already knows that. Semiconductors, daily higher lows set at 173.08. Right back to the bulls being in complete control. Right at the high of 179.08. That's a double top as well. XLV has a double top, similar manner. Both want a convincing break tomorrow. And then the all-time high, 184.61, is right there. And SMH and the semiconductors are some of the names that will be first to get back to the all-time highs with how they are currently positioned. So very bullish day. We had weakness, one day of weakness, and then back to bulls being in full control. Very significant tech sector consolidation, but this whole time we could see it was healthier and stronger than the tech sector. Semiconductors are pretty much like the tech sector bulls, but one up on them. Solar still continuing to absolutely rip. Look at that move. Up at the high, and in the last 7 trading days, the solar sector ETF has gone up 28%. The VIX, I like the 2-day time frame for clarity the most here. We're just waiting for a good old equilibrium break. High, low, lower high, higher low, pretty much a double bottom. 10-cent difference. And we're watching for anything under 31.20 as a lower high. So 24.80, most important support for me. 31.20, most important resistance. As long as we are within that range, nothing is happening in the volatility index as far as I'm concerned. Just waiting for that tightening range to break. The dollar bears came out to start the week. Little daily lower high and lower low, which tells us zoom out because weekly consolidation is underway. And now the question is, can the bulls change the weekly trend? We would have to hold 91.75 and break 94.74 in order to do so. With where we stand at this moment, we are about $1.30 shy of resistance, and we are about $1.80.70 above support. So bulls have a little bit of favor, but we would have to set this weekly higher low sooner rather than later to favor a trend change. And if we do not change this weekly trend, asset bulls remain very happy. Gold lost the 4-hour uptrend, but only by $2. Zero follow through, and $2 on an $1,800 instrument is very insignificant. So I'm watching a bit of a broadening wedge on this 4-hour time frame. And watching this resistance, again, I do have interest to be looking for a daily higher low, but I have to see clear daily consolidation underway for me to have that interest. And I can just condense it down to the 2-day time frame, still looking for the lower high, but I will be interested in attempting a higher low entry. Silver broke the high of its bounce to this point, but it's the same thing. Condense it to the 2-day chart, looking for a lower high on this bounce, but creating the space the bulls need to attempt the trend change. Once we top out, consolidate, and we'll see what that consolidation looks like. Miners double top just under $40. Still keeping these little higher lows going. 38.56, 38.76. Bulls have to break $40 while keeping these little higher lows going. Again, same thing, 2-day time frame, condense it down. We are still looking for a lower high. It just hasn't been set yet. So bulls keeping their control while the dollar remains weak. Oil bulls with a huge save. We were on the verge of confirming a weekly downtrend with a lower high and lower low. Bulls held support by 5 cents. Look at that day today. That is just bulls saying, nope, we are defending that support, and it is a huge green day. So just like that, we were 5 cents from a weekly downtrend. Next thing you know, we're almost $3 above support now. So it is all about 41.72 resistance and 36.58 support. And I would not be surprised to trade within that range for a bit, but it's a clear save for the bulls, and that only helped with the market strength today. It would have been a back of my mind little red flag if oil confirmed a weekly downtrend. We know oil in the broader markets have been significantly correlated for a lot of this COVID dump and bounce. So good sign to hold that support for the bulls. Natural gas daily trend change confirmed finally. Bull break of 219. So we zoom out, our weekly higher low is set, and we now look for a weekly lower high compared to 264. The indication that our weekly lower high has been set will be a loss of the daily uptrend, but as of now, anything above 190 is a daily high or low, keeping this daily uptrend intact. So that's where we stand overall. I didn't do a whole lot of trading today. I did one oversold bounce play on DKNG. I've been trading that name a lot more. Traded it on the gap down open on Thursday. This morning traded it. And that was pretty much the majority of my trading day. I did take a QQQ bearish hedge position, but stopped out of that for a very small loss to ensure that the account gains would stay intact. So for the play on DKNG, was watching the low of Friday, 58.85, and making a play off of that level in 5-minute oversold conditions this morning. And saw a weak 5-minute bounce. Didn't like the size of that bounce. Looked like a bit of a bear flag. So I entered maybe 59.20. I sold half of my position, maybe 59.35, tiny gains. But what that does is it greatly reduces my risk because, again, declining bull volume, this bounce was not convincing to me. So I exit half. My break even is then 59.05. And I put my stop at 58.59. Why 58.59? I wanted to give some wiggle room under 58.85. And rather than choosing the psychological level of 58.60, I want to go right under that little round number to just have a little bit more cushion to work with. And I posted on Twitter today a quote. And the quote was, "It seems the harder I work, the luckier I get." And this was a perfect example that resonated with me. So it is luck that I did not stop out by a penny, absolutely. But it also has a lot to do with the experience and time that I'm putting in to know how much wiggle room to give. And it played out well. Ended up selling at 15-minute EMA resistance at $60. So a nice little win. And that was it. Just one little day trade. Didn't see anything else that I liked significantly, which means lock it in, one step forward on the account compared to Friday, and we'll see what tomorrow brings. Have a good rest of your day. I appreciate you all watching. Like, share, subscribe, do good things. We'll see you tomorrow. Gonna put out an MJ video right now as well.